Hello, everyone. We are live now for this session, and I extend warm welcome to each one of you. And I express my sincere gratitude to Ekansh for giving us his time on this Saturday afternoon on a topic which is of extreme interest to us. This is an initiative, a recent initiative, which not only looks at sharing the knowledge, but it looks at making each one of us here as an expert speaker who comes forward to speak, deliver, present, and make an impact. As we continue with this journey ahead in the coming months, what we will be doing is all the speakers who would come up to speak on this platform would also have an option to be privately evaluated on how he or she has done, which will be another step. I see some Toastmasters here. That's what Toastmasters does. And we would be moving along in this journey to create great speakers and spread knowledge that makes an impact. So Ekansh is not is known to everyone here. He is a chartered accountant, and he has been in UAE for the past few years, in the Middle East for over a decade. Before he relocated to UAE, he was in Bahrain, and I know Ekansh from his time in Bahrain. E-invoicing is his topic. I would not say anything on e-invoicing. That's also not my subject. But I can say that Ekansh eats e-invoice, sleeps e-invoice, and plays e-invoice. Right? That's what he says, and that's what we say, when it's a season of cricket, when we say that eat cricket, sleep cricket, and one more thing, right? So that's there. I would request each one of you to sit back, relax, and we are now moving on to this journey of UAE invoicing, where Akansh will take us through what is important, what are the key updates, and what you should know at this point of time. Please help me welcome Ekansh with a big round of applause without any sound,
Without any
and
sound.
I hand over the screen to Ekansh. Ekansh, thank you so much once again, and the screen is yours.
Perfect. Thanks. First of all, Prabdeep ji, to you for guiding me for the last decade. As you correctly mentioned, I've been following you since my time in Bahrain, and I was glad to get associated with you and with your initiatives. And I was lucky to host him for one of my podcast episodes. So, apart from the tax tax initiatives that I do some sort of, I have a podcast channel. So Pradeep ji was kind enough to be part of one episode and guide new members and students. And it was almost 2,000 views, that episode, good success. I mean, to those who do not know me, I'm a rank holder chartered accountant from India. Worked across multiple jurisdictions. Started from India, the number one law firm back in India, and then Bahrain. Had experience working in Saudi, and then based out of UAE for the last 3 years. Been part of KPMG. This is my sixth year with KPMG and leading e-invoicing proposition there. Have prior experience with e-invoicing in Saudi Arabia and India, and also part of the global team of KPMG for e-invoicing. I've been assisting a lot of very large businesses going live with pilot in July. We'll be discussing about e-invoicing in today's session because, as Pradeep ji said, if you are following me, I am eating, sleeping, breathing, and repeating e-invoicing. So this is the cycle that is going on. This is a rally that is being going on, and I'm not doing it only recently. The very first session I took on e-invoicing was mid of 2024, not even 2025. So I've been speaking about e-invoicing from mid of 2024 because I knew this was coming and how transformative it's going to be. I am very happy to be here, and thank you to 69 all of you to join, and to people watching live on YouTube. Thank you for sparing your time on a Saturday afternoon. I know it's a precious time. You are taking this time, that means the topic is serious and you are serious enough. I will try to make sure to pass on whatever I have. I will pass on in this 1 hour to you, wherever you, and I also want to learn from you through the questions that you would portray. I will also learn myself, because there is no learning one way. It's a joint effort. We will learn together in this session. And so I think I've spoken a lot, and let me get to the subject. If with your permission, Pradeep ji, if you allow me, can I uh, move straight away to the presentation?
Yeah, yeah. Please, thank you, Ekansh. Thank you so much. Please go.
Perfect. Great. Thank you. Great. Let's move on to the subject. Please, so I hope my screen is visible, right? Yes, perfect. Great. So this is the session. Let's quickly, before moving on to e-invoicing, we all are tax finance professionals with experience here in the UAE. Let me first give you the issues that are prevalent in the current indirect tax system. In the current VAT system and in the current tax system, the number one issue is the customers do not receive invoices from their suppliers on time. That leads to delays in payments, delays in input tax recovery. Second, number one, it's the second issue, which is also a very big issue, is the supplier making payment of VAT to the FTA? That we as a customer cannot never ensure. I just got off a call with a client in refund industry, metal scrap refunds. Their refund is stuck because the supplier did not make payment of the VAT to the FTA. So just because of someone else's fault, my credit is being denied. This is a very big issue in today's world. Third, no one can ensure that as a company, you are reporting all invoices in your VAT returns. We all know VAT return is total of sales, total of purchases. Does FTA get the invoice level breakdown? No. Until and unless they audit you, they do not have access to your invoices. Whether you reported 100% of them, have you missed reporting anything intentionally or unintentionally? This is also an issue today. Fourth issue is may not be applicable to many business, but it's applicable to very, very large businesses also. Loss of physical invoices. I have a big client, one of the largest groups in Abu Dhabi. They were storing all invoices since 2018 in a warehouse. Almost hundreds or two hundreds of thousands of documents, purchase invoices. The warehouse went under fire. They are under FTA audit. They are not able to give any purchase invoices to the FTA to be able to justify their VAT refunds and input. It's a big challenge for them. So this is a real case I'm telling you. This warehouse went under fire. They have zero invoices. They did not scan it. Fifth issue, the FTA, since they do not have access to your invoice level breakdown, they are not able to do analytics on your data. It is practically humanly impossible for the FTA to audit each and every company in the UAE. So they are not able to do that analytics and have proper data for their country. Shadow economy, we all know it's operating in some parts of UAE. You go and pay in cash, you do not get a tax invoice, or you end up avoiding paying VAT. So that is also operating in the UAE. Manual reconciliations, I'm sure all of you are doing at the end of each tax period. You are reconciling your journal ledgers with your VAT returns and fixing those gaps. Lastly, human errors. We all are human. We make mistakes. I am also a human. I make mistakes. Sometimes we mention incorrect TRM. Sometimes we mention incorrect quantity. Sometimes we mention incorrect address or anything. So that leads to issuance of credit notes, multiple documents. So these are pretty much the issues which I noticed, because I have been into indirect taxes since all my life. So I know these issues are prevalent in today's structure in the UAE. Now coming on to why we are discussing e-invoicing in the UAE. So issues we know, just keep it in mind. So those issues which I just discussed, I discuss them for a reason. So keep them in mind. Those issues we will plug with the help of e-invoicing, and we will discuss how. So first, before going to the invoicing concepts, I'm sure most of you already know the concept, but for the whole audience, I want to start from the scratch. UAE has a vision of We the UAE 2031 vision. As part of that vision, one of the big pillars of that vision is e-invoicing, which is e-billing. Now, I was listening to the podcast of AI Minister of UAE. He said a country of 10 million, UAE with a population of 10 million, if they want to compete with a country of 100 million or even a billion, how can they compete? We cannot compete humanly. Humanly, it's impossible. But if one person becomes 100 or 1,000 or even 1 million through technology, then we can compete with anyone in this entire world. So their objective towards 2031 is to completely digitize what all processes they can digitize by 2031 so that they can stand out in the world, they can go to global organizations and be the change maker. And the one important thing which I would like to highlight here, can you see the timeline that is mentioned on this ministry? This is straight from the Ministry of Finance website. July 2025. E-invoicing was supposed to be introduced by July 2025. We are sitting in February 2026. Still, it's not implemented. So that goes to show the scale of transformation. Have you seen any tax legislation being extended since 2018? Zero. Zero extension in the UAE for VAT. People were assuming on midnight of 2027 or New Year's midnight 2017 that VAT will extend. It did not extend. People were assuming corporate tax deadline will extend last year from 30th September. It did not extend. The only extension in the UAE I have seen personally with respect to tax compliances, tax legislations is the e-invoicing. July 2025, they started, then it moved to July 2026. Now, the updated timeline we will discuss in the subsequent slide, but it's January 2027. Before going to the timelines, let's keep few things clear. I'm sure most of you already know this, but it's very important to get basics cleared. I'm sure most of you would know, okay, why are we discussing e-invoicing? We are not in Stone Age. We are not in Stone Age. We are not issuing paper invoices, Ekansh. Why are you discussing about e-invoicing? I am already issuing e-invoices to my customers in the form of emails, in the form of PDFs, Word file, Excel, or whatever, or on the portal. Why are we discussing it again and again? We are discussing is because all the invoices that are issued in the country do not speak to each other. They are in different formats, they are in different templates. Some companies mentioning the date as DDMMYY, but other companies mentioning as MMDDYY. Someone is mentioning only the PO box as an address. Someone is mentioning the full address. Someone is having four columns. Someone is mentioning quantity properly. Someone is mentioning description properly. It's completely unaligned structures circulating across the country. The e-invoicing, what it will do as a travel adapter on this slide. Travel adapter is taking input from multiple wires, multiple places, and making a common output. So e-invoicing will make sure they will take input from multiple ERPs in the UAE and ensure the output is common. They speak the same language. They look like, I mean, broadly, the foundation is same and they are structured, they are machine readable, and they are scalable. So that is the idea of e-invoicing, to structure them, align them in the same structure so that they can be read by machine and it can be read in real time basis by the FTA. Great. Now moving on. Now I think basics should be cleared. We have cleared the basics, right? We know why we are introducing e-invoicing, what is e-invoicing, what is not e-invoicing. Let's straight away jump to UAE invoicing. On this one slide, I have tried to capture pretty much most of the things when it comes to UAE invoicing. See, e-invoicing in the UAE is not new. E-invoicing has been in place in 50 plus countries across the globe. started 2 decades ago in Latin America, Chile, Brazil. Those Latin American countries were the first one to implement e-invoicing, and it has gained traction since then. So e-invoicing is not new to UAE, but the model in which UAE is implementing e-invoicing is very, very unique. We will be discussing the model in this next slide. On this slide, I want to discuss what has happened till now and what we are expecting in the future. What has happened? We know that e-invoicing is applicable on B2B and B2G supplies. Now, what is B2B and what is B2G? Any transaction between a business to business and business to government entity will be subject to e-invoicing. When I say business to business, it also includes businesses that are not registered for tax. So if I'm dealing with a business that is below the VAT threshold, they are also considered as a business for e-invoicing purposes. Three ministerial decisions have been issued for e-invoicing, 64, 243, and 244, containing the applicability, timelines, and stuff, definitions. Cabinet decision 106 has been issued for providing the penalties for invoicing. Print AE is the layout of the invoice, basically the all the elements that will be part of the tax invoice going forward. And there is a list of 18 pre-approved ASPs. We'll discuss what these ASPs is shortly. Now, on the right-hand side, these are the timelines. I'll walk you through one by one. The number one timeline is July 2026. Now, 1 July 2026 is not relevant for 99% of the country. Less than 1% of the country, which is around top 100 companies in the country, have been requested by the Ministry of Finance to go live for e-invoicing 6 months in advance. So it's a request from the ministry directly to those companies. I am assisting a lot of such businesses which will be going live in July 2026. So it's a completely voluntary adoption, and you may or may not be in that pilot mode. But the first timeline which most of the country has to worry about is 31st of July 2026. Now, this timeline is also relevant for businesses in phase one. So there are two phases for implementation of e-invoicing. The phase one is for businesses with a revenue of 50 million dirham and above. So if you have a business, if you or your client, I'm sure some are consultants on this call, some are from the industry. So if you or your client have a company, a legal entity with a revenue of 50 million dirham and above, you have to appoint an ASP by 31st of July. Now, what is an ASP? ASP is an accredited service provider. Accredited service provider. So for you to implement e-invoicing in the UAE, it is a mandate. I repeat, it is a mandate for you to appoint an ASP to comply. In Saudi Arabia, in India, in Malaysia initially, there was not a mandate. You can implement e-invoicing, you can integrate directly your ERP with the tax authority portal and start generating e-invoices. But here, the authority has opted for a decentralized five-corner model. Decentralized meaning they have completely decentralized the process of generating and validating invoices to these third-party ASPs. So these ASPs will act as de facto tax authority when it comes to generating and sending the e-invoices. So it's a mandate for you, which is not the case in Saudi Arabia. So if you have entities in Saudi Arabia, please understand that there is not a mandate in Saudi Arabia for you to appoint an ASP. Now, coming on to now, most of you would have heard about Oman. Oman is also going with the same five-corner decentralized model. That means it's a mandate for you to appoint an ASP there. Now, we'll not discuss Oman here, but just to give an idea about the model that they're going to implement. So once you have appointed an ASP by 31st of July for a business which is 15 million dirham and above, the go live date is 1st of January 2027. For businesses below 50 million dirham, you have to appoint an ASP by 31st of March 2027. and go live on July 2027. And for government entities, they have a additional 3 months grace period. All government entities will have to comply with e-invoicing from 1st of October 2027. So this is broadly the timelines. Now let's discuss the model. What is this model? I'm sure most of you would have heard about five corner decentralized model, would have seen this slide or a similar slide in multiple presentations. This slide may seem very heavy and busy. I will try to break it down in very simple and actionable terms. Now, in simple terms, imagine you are a supplier. You are a supplier. You have supplied certain goods or services to your customer. Now, what naturally happens when you supply something? You issue a tax invoice, right? In order to receive payment, you have to issue a tax invoice. So on this slide, let's start from top left corner. You are in corner number one. Corner number one, you are the supplier in a supply chain. You will not be sending any invoices directly to your customer. I repeat, you will not be sending any invoices directly to your customer. That's a big statement to make, but that is the reality in the UAE model. You will be sending the details of your invoice to your appointed ASP. As we discussed, you have to appoint an ASP. You have to share the transactional level details of that invoice to your ASP, which is sitting at corner 2. That ASP will validate the contents of that invoice. Okay, does this invoice meet all the criteria for e-invoicing? We'll discuss the criteria shortly, but what they will be doing, they will be validating, making sure this invoice is complete. Once they are satisfied, what they will do two things. One is providing a summary file of that invoice in the form of tax data document, which is called TDD. So they will send TDD to the FTA on a real-time basis. At the same time, they will pass on that invoice to corner 3, which is the buyer's ASP. So buyer also has an ASP to receive the invoice. So once the buyer's ASP also validates the contents of the same invoice, they will again do two actions. One is providing the tax data document to the FTA and also sending the invoice to the buyer, which is sitting at corner number 4. So buyer will receive the invoices through their appointed ASP. It will not be coming from the supplier. So this is essentially the five corner model. Imagine if you have to go like, if I have to give an analogy, say if I have to go from UAE to Saudi Arabia, how will I go? I will first go to the airport. Consider the airport, UAE airport is your ASP. They will do the checking, scanning. Once they scan, okay, Ekansh is ready to board, they will allow me to board. But I cannot still enter Saudi Arabia, even if I reach there. The Saudi immigration will again check me. Same thing they will check, visa, passport. Then if they are satisfied, they will allow me to go to my hotel in Saudi Arabia. So similarly, an invoice from supplier to customer, it will go through multiple layers. One is supplier's ASP, second is buyer's ASP. So this is essentially the five corner model where you will be operating in four corners, which is corner 1, corner 2, corner 3, corner 4. You don't need to worry about corner 5, which is the FTA, but FTA will not be doing any validation, any generation. They will simply be receiving the tax data document from corner 2 and corner 3 and retaining it for their purposes, maybe data analytics and whatever. So now this entire process from corner 1 to corner 4 has to be completed in less than 10 minutes. Normally it happens in real time basis. Corner 1, if you send an invoice from corner 1 on a real time, less than 1 second, you will get the invoice at corner 4 if all the validations approve. But maximum time FTA has allowed, because I am in the working group of FTA, and they have allowed a maximum number of 10 minutes to be processed. So there cannot be any downtime at the ASP level for more than 10 minutes. So if there is more than 10 minutes, these ASPs are going to be penalized. So this is essentially the five corner model. Imagine now you may have a lot of questions. I'm sure you will have a lot of question scenarios. I'm used to having all these questions. Okay, what happens if my customer is export is outside the UAE? What happens if my customer is not in phase one? What happens when I need to purchase? How the invoices will flow? Do I need to accept, reject all these things? So let me break it down all those questions because I already know these questions. So I will just clarify these questions. When you are dealing with this entire model will happen when you and your customer in the UAE are in the model. They have appointed ASP, they are generating and receiving e-invoices. But where your customer is either outside the UAE or they are in phase two, that means they have to implement in July and you had to implement in January. What will happen is you will send all invoices regardless to your appointed ASP at corner 2. There will be a dummy identifier. There is a dummy identifier that FTA has provided. So wherever there is no corresponding ASP of the buyer, through that dummy identifier, the system will recognize, okay, this invoice will not go further. This will only go to corner 5. So it will be corner 1, corner 2, corner 5. Now you would say if the invoice is not going to the buyer automatically, how will I give it to the buyer? So what ASP will do after an invoice is validated, they will convert that invoice into PDF. So every ASP in the market has that functionality that although everything will be flowing in XML format. XML, I'm sure all of you know, extended markup language, which is the language which machines can read. We can read PDF, we can read Word. Machines cannot read that. Machines can read XML. So everything will be flowing in XML. But in order for humans to read, they will be able to convert that XML into PDF. That PDF, you can separately email it to your customer, whether they are in phase two or they are in another country. Similarly, if you have zero invoices for sales, in order to receive purchase invoices, you have to have an ASP. You cannot say, I will not implement e-invoicing because I don't have any sales. In order to receive a purchase invoice, you have to appoint an ASP. If you do not have an ASP, you will not get an e-invoice. If you do not get an e-invoice, your input tax recovery will be denied by the FTA. So that is very important to understand that implementation is must for whether you are 50 million of dirham above or below 50 million. Below 50 million includes zero revenue also. Moving on to, so most of the applicable scenarios we have covered, but just for clarity, I try to cap this slide. Uh, so all businesses operating in the UAE, regardless of VAT registration status. When I mentioned the 50 million dirham and above threshold, I'm sure, first of all, Pradeep ji, are we allowed to take question now or we'll do it in the end?
It's up to you, Ekansh. We can take, you can ask for the responses in chat.
Okay,
That would be easy.
probably.
Yeah.
Maybe can someone, I want to ask a question because we have spoken a lot. Can anyone tell me how to calculate the 50 million dirham if someone wants to maybe mention in the chat? How do
Or,
you
or,
calculate
or
50
maybe
million?
unmute also because
You can
this
unmute also.
unmute also.
We will keep the floor open for a couple of minutes and then
Yeah.
move back to the presentation.
If you are not able to unmute yourself, let me know. Uh,
Yeah. If anyone can clarify, how do you calculate 50 million dirham threshold? Anyone would like to nominate themselves
yeah,
or in the chat?
anyone in the Zoom? Yeah, there's one message there in the chat.
I think someone has mentioned revenue as per
But
financial statement.
yeah, yeah.
Am I
Yeah,
audible?
revenue as per
Okay.
financial statement signed for the previous year, right?
Yeah. So if you have a group, let's say if you have 10 entities, how will you consider the consolidated financial statements? Or let's say
Yes, consolidated financial statements we will consider. Is it correct?
okay. So I'm just listening to all the answers and then then I'll clarify. So someone is saying standalone, someone is saying yeah, individual, someone is saying standard rated, zero rated, someone saying consolidated. Okay, let me clarify. Anyways, good to interact so that I do not, I know that I'm interacting to humans. So good to
And
have that
Ekansh,
response.
Manish here, just a quick one. If there is no, let's say the company is formatted new in the current financial year, doesn't have any history, then what will happen?
Then you will be in phase two.
Okay, thanks.
Yeah. So the final revenue you have to, as most of you mentioned correctly on the chat, the revenue that we are looking at is based on the standalone financial statements of the company. You have to look at the latest accounting year, not 2025, not 2020, whatever, latest, whatever. Some companies have year ending in January. Some companies have year ending in February. Some companies have year ending in March. So you have to look at the latest accounting year and see if, as per that financial statement, my entity's revenue is 50 million. That will include B2C or not? Anyone would like to answer? So B2C we know is not subject to e-invoicing, right? B2C is not subject to e-invoicing for now. I will discuss the timeline. I know the inside news when B2C is also coming. So can anyone confirm well whether B2C will also be included in the okay, yeah, perfect.
Yes.
Great.
Total
Good.
turnover.
Total turnover. Perfect. Very happy. So total turnover you have to look at of the business, whether B2B, better B2C. So that means that 100% B2C company, if a company has 100% B2C supply, do they need to implement e-invoicing? The answer is yes, because they have to purchase. In order to purchase, they have to receive an invoice through an ASP. So that is clarified. Scope is complete end to end. All your AR transactions, whether it's taxable supply 0%, 5%, exempt, and out of scope, all are subject to e-invoicing. That means even though you may not be issuing an invoice today for such transactions, from next year you have to issue an e-invoice for all these transactions. We'll discuss them in detail in the future in the subsequent slide. But idea is to understand that everything and anything that you book as revenue in the books, mark my words, anything and everything you book as a revenue in your books has to be supported by an e-invoice. Now, there are certain exclusions. I will come to that later. But standard is you have to issue e-invoice for each and every revenue that you park in your books. Now, very
Sorry, sorry, Ekansh. I had one query. So regarding high C sales, so those are also included. Normally they are
yes.
out of scope, right?
Yes, you have to issue an invoice for that as well. Even when
Okay.
it's not the scope that I on the right hand side, as you can see, inclusions, I have clearly marked that even drop shipments where goods are flowing from outside to outside, even for
Hmm.
those cases, you have to issue an invoice. There is no exclusion for that whatsoever. So you have to issue
Oh,
an out of scope invoice, which is a commercial invoice, which I'll be discussing subsequently.
great.
Uh,
Thank you.
One recent very milestone, although I was not expecting, I'm still in shock. I'm still not able to digest this amendment in the recent guide. The fourth bracket, the fourth bucket on my slide, foreign businesses registered for tax in the UAE. So this they have extended the scope in all my presentations. If any of you have attended in the past since 2024, I was always saying in my slides that foreign businesses are not subject to e-invoicing. It was clearly mentioned on the Ministry of Finance FAQ portal. Also, the understanding, I mean, how can you expect a business in based out of, let's say, Slovakia or in Korea, how can you expect their ERP system to get integrated with an ASP that is based out of UAE? It was never expected. Now they have, in the recent guide, they have clearly mentioned that if you have a foreign business, that means the place of residence is outside. You should not confuse this case with POEM, PE in UAE, FE in the UAE. PE in the UAE, fixed establishment in the UAE, that means the person is resident in the UAE. I am talking about non-resident. If an entity is a non-resident entity in the UAE and they are registered for tax, can someone give me an example? Why would a non-resident entity be registered for VAT or corporate tax? Can anyone give an example? No example? Oh, sorry, I'm checking
Yeah.
the chat. UJV? No, POEM is outside. Why would I register in the UAE? So my question is, POEM is outside UAE. You are saying, see, a company is incorporated in Saudi Arabia. I will not go far. Nexus, see, if Nexus is there, then you are saying that I am becoming a resident here. See, I am saying permanent establishment is not in UAE. They are a non-resident entity. Don't confuse it with permanent establishment in UAE or POEM in UAE. Company is incorporated in Saudi Arabia. A company does not have a single employee in UAE, not a single branch in the UAE. Why would that company register for VAT in the UAE? Any example? Company has zero employee in the UAE, zero branch, no connection, no nexus. I have a lot of clients like that. I'm sure most of you know place. If you are rendering services in the UAE, reverse charge is applicable. Reverse charge is applicable, right? In which cases reverse charge is not applicable? If you are importing services from outside of UAE, a non-resident entity does not need to register for VAT in the UAE. In which cases you have to register? I think someone gave a good example. Place of supply falls in UAE. For instance, they make real estate supply. Very good example from Rufus Jacob. Non-resident company based out of Saudi Arabia. They have zero nexus, zero PE, zero. We don't have to confuse about PE, FE presence. That means I'm a resident if that is the case. I am a non-resident. I have only, let's say, a fixed establishment. Sorry, not a fixed establishment, like a real estate, or let's say I am supplying to B2C customers in the UAE, or I'm supplying to government entities. I have a client based out of UAE, based out of US. It's a very big defense organization. They are supplying military products to Ministry of Defense in the UAE. Ministry of Defense is not registered for VAT. Does that entity need to register? Because they are coming and installing those military products in the UAE. Place of supply is in the UAE and customer is not doing reverse charge. They are registered for VAT. That business has to implement e-invoicing to issue e-invoices to Ministry of Defense because B2G is included in the scope. I was always telling that business no need to do e-invoicing, but now I have to retract my words. I am going back. It's not so that is why human, you have to acknowledge that this is a change and inform your client accordingly. Previously it was excluded, now it's included. So very big change out of the recent guide. Now coming on to other exclusions, import of goods, import of services. When you hear these two words, import of goods, import of services, forget about e-invoicing. No e-invoicing needed. Exempt and zero rated financial services. So these are, so banks had lobbied for this exclusion for a long time. Since 2025, banks, or I would say 2024, all the banks in the UAE were lobbying for this exclusion because initially interest income was also subject to e-invoicing. But, but in the ministerial decision, the Ministry of Finance has clearly excluded interest income, which is financial service, or any other financial service for that matter, from the scope of e-invoicing, whether it's exempt within UAE or export outside the UAE. Certain international transportation services are excluded. Now, the important thing is intra-group transactions, which is transactions between entities within the same VAT group. So those transactions are right now disregarded for VAT. No VAT is applicable, out of scope. But they were initially in the scope of e-invoicing. Now, just to ensure smooth implementation and companies do not face so much trouble, they are allowing a grace period as per the recent guide. They have allowed a grace period of 24 months. 24 months starting from January 2027 until December 2028. Intra-group transactions will not go through e-invoicing. But after that, there is no exemption. From 2029 onwards, all transactions, whether intra-group, inter-group, outside group, everything will be subject to invoicing. And certain air cargo services, they provided a similar exemption for 24 months. Now, this is how an invoice will look like in an e-invoicing era from next year. And for pilot entities, will start issuing this invoice from July. So some of my clients will start issuing invoices like this from July 2026. Now, what is changing? Now, you may see, governments cannot dictate how to run a business. Business is run by businesses. So they cannot tell you what quantity, what value, what customer name, and everything you have to mention. That is coming from a commercial thing. So that is why most of the fields you are already mentioning on your tax invoice, which you are issuing today for VAT purposes. Maybe 20 to 30 data points. Out of this, you are already mentioning on the tax invoice which are issued today. Now that 20 to 30 is going to increase to 51. So minimum 51 data points you have to provide to your ASP in order for that invoice to get validated. If you do not provide these 51 minimum data points, the ASP, your ASP will show up an error and say this invoice cannot be processed further. You have to fix it. Once you fix it, then only you can send it across. Now, I will not walk you through all 51. I would like to walk you through all 51, but given the paucity of time, given we only have an hour for this entire presentation, I'll walk you through very key data points. My question is, are you mentioning payment due date on the tax invoice issued today? The answer is no. Only very few businesses mention payment due date. Even if you are mentioning payment due date, you say 30 days, 60 days, 90 days from the invoice date. Now, from tomorrow, you have to mention a particular date, like 5th of May or 9th of June, the invoice, that is the payment due date. It cannot be number of days. It has to be a date, which is a mandatory item from tomorrow. And TIN number. TIN number is your unique identifier from next year. It will not be your TRN, because even if a business is not registered for VAT, someone asked a question about high C sales. If a business in the UAE is only doing high C sales or drop shipments, they are not required to register for VAT. They don't need to obtain a VAT registration because everything that they are doing is out of scope. But still, they have to register for corporate tax. So once they are registered for corporate tax, the first 10 digits of that corporate tax number, or the first 10 digits of whatever your VAT number, that is your TIN, tax identification number. So that tax identification number will be your identifier along with UAE code. So entire technology that is, we are using, I'll go back to that slide. The technology that we are using for passing on the invoice from one ASP to another, so from corner 2 to corner 3, how these invoices are getting sent out, there is a technology underneath which is called PAPOL. PAPOL, I'm sure you would have heard this term a lot of times. PAPOL is nothing but like a blockchain. It's like a network where you are able to exchange documents. It was initially started in Belgium under Open PAPOL organization, and initially used in Europe for exchanging documents with government entities. But now, given the technology was so robust and scalable, governments are now using PayPal technology for exchanging e-invoices. So PayPal is an international organization. So all the countries that are using PayPal for e-invoicing, so every entity that is registered for PayPal will be registered in the global PayPal directory. Now, how will you known in that global PayPal directory? Not through your trade license number, not through your TRN number, not even through your TIN number, but with your PayPal ID. Now, what is your PayPal ID, which is the participant identifier, they call it? It is 0235. Like plus 971 is the telecom code for UAE. If you want to call me, you have to know plus 971 and my 50 number. So plus 971 is replaced with 0235, that is fixed for UAE. 0235 followed by first 10 digits of your TRN, which is TIN, becomes your PayPal identifier, which is your identifier in the global PayPal network. Like you have a mobile telecom number, similarly, that will be your number in global PayPal directory. If someone has to send you invoices, someone you have to send to invoices to, you have to know their PayPal identifier. So it is very crucial that for you as a business, you obtain PayPal ID of all your businesses, of all your customers. At the same time, you share your PayPal ID with all your suppliers. Because if you do not share it, if you do not get it updated in the supplier's master, then they will not be able to send you e-invoices. Similarly, you will also not be able to send e-invoices to your customers if you do not have their PayPal ID, which is the electronic identifier on this slide. The last point I will discuss is the trade license number. Are you mentioning the trade license number on your invoices? Maybe one or two, one of very few. Majority of businesses do not mention trade license number. It's a mandatory item from tomorrow. Couple of these things I wanted to highlight, but this is how your invoice will look like. 51 data points that you have to share with the ASP. Now, should I stop at 51? No, Ekansh does not want to stop at 51. There are hundreds of data points in the PayPal dictionary. PayPal dictionary is called PINT, P-I-N-T, PayPal International, they call it. And for the UAE version, it's called PINT AE. PINT AE means PayPal International Arab Emirates. So that is the UAE version of the PayPal dictionary. Invoices issued in the UAE PayPal will not be same as invoices issued in Singapore PayPal. So Singapore implemented PayPal in November 2025. Malaysia also optional basis implemented. Belgium went live with PayPal in January 2026 this year. UAE and Oman are next, and many other countries under PayPal are in pipeline, like France, Germany, Poland, and most of them. The reason they are using PayPal is the technology is very robust and it's a decentralized approach. The tax authority does not need to worry about each and every invoice, because I'll give you a very fresh example what happened in Saudi Arabia. Because in Saudi Arabia, tax authority is reviewing each and every invoice. In one day, the tax authority system was down. So from 8 a.m. to 10 a.m., invoices were not generated by the country. Imagine how big of a loss this is for the business. So that is why UAE government did not want to take the responsibility of generating each and every invoice. They said, I will outsource this activity to third parties. And before giving the right, I will test them. I will test them rigorously. So after a 6-month rigorous testing, only I get approved and get put on the list. No, anyone from from the street cannot be on that list. So there is a very rigorous mechanism. So now coming on to, as I was saying, 51 is the minimum data point. So 51 is the minimum data points that are need to be there. So there are 16 use cases as you see on this slide. The number one use case, which is the UAE standard tax invoice, which I just showed you, right? Which was 51 data points. Now, the data dictionary, which is the UAE PINT, it does not stop at 51. If you are doing any supply under reverse charge mechanism, the fields will increase. If you are making any zero-rated supplies, there are additional fields beyond 51. Similarly, for exports, container supplies, summary tax invoices, e-commerce, margin scheme, commercial invoices for out of scope and exempt transactions. So it's very important for you to first assess as a business how many use cases are applicable to your organization. Do you have deemed supplies? Do you have continuous supplies? Do you have standard tax invoice? Only once you understand these use cases can you then implement the e-invoicing. Because if you do not know these use cases, on what basis you will implement e-invoicing? You don't know which fields are required to be integrated, which fields are required to be mentioned on the tax invoice. And how will you generate invoices in each of these scenarios? Will you put it manually? The user will select this transaction is under use case 10, use case 5. If you have millions of invoices, how will you automate? So that is the part of the assessment that needs to be done much before you integrate and implement e-invoicing. I'm sure most businesses will have very straightforward standard transactions, maybe one or two transactions at max. For them, it will be an easy exercise. The groups I am assisting, they have like 80 entities, some have 200 entities. For those each of those entities, I have to look at which are the use cases applicable and which are the fields required, because they cannot go and implement and integrate 70, 80, 90 fields. If you add extra fields, then the system will get confused, the user will get confused, okay, which field has to be mentioned in this scenario or not. So it's very important, the fields that you make mark as mandatory in your ERP system under the each scenario for your business before you go and implement and integrate within ESP. Now, of course, I am a VAT professional first and then e-invoicing next. The recent love of my life is e-invoicing. But of course, I started with indirect taxes. So there are a couple of nuances between VAT and e-invoicing. Like phase one and phase two reconciliations, as I mentioned earlier, you will have certain entities in phase two and certain entities in phase one. So how will you ensure reconciliation? Okay, and how will you know whether a particular entity is in phase one and phase two? It is not my responsibility to determine the revenue of my customer, right? I cannot go to my customer's balance sheet and figure out phase one, phase two for them. So I need to obtain declarations. I am advising all my clients to obtain declarations, letters from the customers who are also with the suppliers, that if you are giving me a manual tax invoice in the first 6 months of next year, then I will only pay you if you give me that declaration. Because if you send me a manual tax invoice, the FTA will ask you, okay, on what basis have you taken this credit? Then you should be in a position to justify my supplier was in phase one, or sorry, phase two. So those declarations are very, very important. Simplified invoice concept is going to eliminate. There will be certain invoices that will be issued in 2026. You will be receiving in 2027. That is fine. No issue with that. Reimbursements and cross charges will also be subject to invoicing. Declarations and contractual terms, as I said, it's very, very important. One thing you can note today, and you can ask me next year, same time, or maybe in January next year, the number of credit notes that will be issued in the first 6 months of next year will be higher than the number of credit notes that are issued till date from 2018. You can mark my words, you can record this, and we will have this conversation again in June 2027. There will be endless back and forth disputes, wrong issuance of invoices, because you cannot cancel it. Once an e-invoice is issued, it's in the system. You can only cancel it by way of a tax credit note. You will give me an incorrect use case. You will give me an use case invoice under 5. I say it's not 5, it's 7. I will reject it. I will say, issue me a credit note. Please issue me a credit note. Clients will simply issue use case number 1. 51, they will give me 51. If I am if I am an informed customer, or if I am the consultant of a customer, I will say, please don't pay this invoice. This is an incorrect invoice. This does not have fields required under use case 7 or 9 or 10. So I'm telling you the number of cases of rejections and cancellations and new invoices, is going to be humongous. Advance payments, they have clearly made it a separate identifier on the invoice. A separate identifier has to be there on the invoice for advance cases. The last is the administrative exceptions. Administrative exceptions will discontinue if you as a business have obtained any exceptions for zero rated exports or anything. Those exceptions you can delete after 31st of December 2026. So the approach that we do, I think, which I am doing for my clients is, start with initial awareness, planning, doing that assessment, use case mapping, understanding how many data elements are there on your existing invoice template in your ERP, where do you want to go, that is a gap, functional assessment, and then, making you ready, policies, procedures. This is not the one thing which I tell to my clients is, this is not a tax compliance project. This is, please don't consider it like a VAT or corporate tax compliance project at all. What if you do not file? My question to the audience, what if you do not file a VAT return? What is the consequence? What if you do not file a corporate tax return? What is the consequence? The consequence is penalties, right? Your business is continuing. But if you do not implement e-invoicing right, your business hampers, your business disrupts. Imagine your customer is not paying you because you did not give them the proper invoice. Your business hampers. The tax team will be under fire from the operations team. Why you did not implement properly? IT team will be under fire. So and they will blame it on tax finance because they will say you were leading it. So all these things will come. So it is very important to get the processes in place, SOPs, manuals, who is responsible for which scenario, what will happen if this happens, rejection happens. So this is very important to get these place. And I'm sure most businesses are sending straight away emails to all ASPs, 18 ASPs. How do you select the right one? We help, I can, that way it's I help my clients selecting the right vendor, because the list is only going to increase. 18 is not enough. Even 100 is not enough for the country as big as UAE. So yeah, and then of course handing holding with the implementation. The reason I put it, most of you, if you are consultants, you can use a similar approach for your businesses, guide them from the start, use case mapping, functional assessments, helping them in selecting the right vendor for the business, not for yourself. So that is where we also need to make a distinction, because some ASPs will be good for certain sectors. I have certain ASPs who have strong experience in automotive. So I'm selecting that ASP for my clients, for automotive clients. So that is where it's very important to understand the approach, and hand holding them with the implementation. So I think we have finished right on time, and thank you everyone. As I mentioned earlier, I all work and no play makes me a dull boy. So I do some sort of content creation and podcasting on my YouTube and Instagram channel. I have mentioned my handle here. And in case we are not connected on LinkedIn, would love to connect with you so that we can exchange insights and stay connected in this environment. Thanks again, Prabdeep ji, for setting this up. It was an
Thank you.
amazing experience interacting. Yeah, sir, over to you, sir.
Yeah. Thank you, Ekansh, and thank you so much. I am sure I see the attention from the people here and also on the YouTube, where around 100 odd participants have got the benefit of hearing you live. And maybe you can stop sharing Ekansh screen. Yeah, now. And
Sure.
and though we don't have time now, but if I can't, you think that we can spare 3 minutes, or
Yeah,
we can take one or two questions?
definitely.
Okay,
Definitely.
so quickly, anyone who wants to ask question can unmute themselves because there are so many messages in chat. It's difficult to see. You can unmute and share your question. With regard to the presentation, one thing is there that it's live on YouTube. You can go and
I can share that in PDF
yeah.
also. That's fine. I will share
Okay,
it with you. I'll share it with you, sir.
yeah. So then you can message me and take from me after some time. Yeah.
Yes.
So then I can give it to you. So quickly, anyone has any question?
Yeah, may
If
I ask one question?
yeah, yeah, please.
Yes,
Ekansh,
please.
actually, I just have a genuine question related to, which software can be used, accounting software when you have a dollar is a base currency and, for e-invoicing, which will be a good accounting software along with the e-invoicing.
That is a out of scope question for me. No, but
Right, because you have an idea, and for
I know,
me,
I know, I
like
know.
base currency is a problem,
I know, I
so
understand. I
yeah.
understand. Actually, the selecting an accounting software is again an art. It depends on the number of invoices, your business, what type of business you're in. Maybe Pradeep ji will have a better idea on this. Selecting an accounting ERP software is not a one size does not fit
Yeah.
all. So it depends
Hmm.
on your business. Every business, if you are in shipping industry, you have 100 data points to add. You are in custom agent, you
So
have 100.
I'm into asset management company. So do you have any idea? And the reporting is into base currency is dollar. So
Maybe we can have a separate chat on this.
Yeah.
sure, sure.
If you have any e-invoicing specific questions, we can consider for the wider audience, and then
Right.
these
Yeah.
private
So if
questions.
anyone has question, you can. Yeah, Manjunath, you want to ask
Yes,
anything?
Ekansh. Yes, yes, sir. Ekansh, I have one question for you regarding this ASP. What is the qualification requirement for ASP? Can a chartered accountant or in India or in UAE can act as a ASP, or these guys will be selected by the government, UAE government itself?
Yes, very good question. So there is a proper guide they have issued for you to become an ASP. Not They are not selecting themselves. You have to file an application. It's a simple application on the Ministry of Finance portal. You can go and file, and you have to portray that you have to demonstrate that you have implemented e-invoicing in two countries, maybe in other any country in the world, two countries like India, Saudi Arabia, and you have to demonstrate technical, and you have to have a local UE license. You have to obtain certain professional indemnity insurance. So all these, there are certain criteria which I can guide you separately. There's a guide on the Ministry of Finance portal I can share with you. But
Okay,
you
thank you
can
so much.
become, yeah. It's the
Okay,
short
thank
answer
you
is
so
yes.
much.
If you meet the
Yes, thank.
criteria, you can become, yes.
Okay, thank you so much, Ekansh. I will connect with you personally in this
My
regard. Thank
pleasure.
you so much.
My pleasure.
Yeah, Sahil,
Hi,
you want to
Ekansh.
ask?
Yeah,
Yeah, please
yeah,
go.
yeah, correct, sir. Hi, Ekansh. So, in terms of insurance companies, where insurance brokers are, liable to do self-billing, how will the e-invoicing mechanism work in this particular scenario?
So insurance companies, I assume in this case, so who is issuing the invoice? Broker is issuing on behalf of the insurance company, or insurance company is issuing
Correct.
on behalf of the broker?
The broker is issuing a self-billing on behalf of insurance company.
Then they have to comply with e-invoicing, because then there is a separate use case for self-billing scenarios, and broker has to ensure that all those mandatory data points are mentioned in that self-bill document.
Okay,
So brokers will have to ensure that.
and in this case, insurance company won't be liable to do the invoicing, right?
No, no, you don't need to do a separate invoicing, yes. But you
Okay,
will be liable for any non-compliance.
okay, understood.
Yeah,
Thanks,
liable
thanks a
because
lot.
you are the supplier.
Right.
Okay, so with this, I think Ekansh, we are done with the questions. Express deep gratitude to you
My
for being here and supporting everyone. Thank you to all the attendees here and also on YouTube. And look forward to connect again with you some other time. Have a great evening
Have
ahead.
a great evening. Yeah.
Yeah, and great weekend. Anything else, Ekansh, you would like to say?
I think very thanks to you and thanks to everyone who
Yeah.
joined. I mean, always a good exchange, and thanks to you for setting up this forum, sir. I'm sure most of us would have taken away key things, and through your medium, I think it's such a great initiative that you are doing, sir.
Yeah, actually, the knowledge is, like a makeup. That if
Yeah.
you don't put a makeup, it's of no use. If you don't use the knowledge, it's of no use.
Exactly. No, exactly. So that's why I mean, you are connecting people like me to a wider audience and me to, everyone to us, all of creating this ecosystem. We are blessed, I mean, to
Yeah,
be part
yeah,
of this
yeah.
ecosystem.
And most important thing, one of the thing what I said in the beginning also, this is not only to spread knowledge, but also to create more speakers like
Yeah.
Ekansh.
No, no, of course.
Thank you,
And
thank you.
anyone can always, reach out to me and to Prabdeep ji, we are, connected deeply. So we would love to, exchange any insights or anything you want, any counseling. We are always here.
Thank you, thank you. Thank you so much.
Thank
So with this, we sign off for today.